Welcome to the Wise World Investment Planning Town Hall for the first quarter of 2021. You're in the right place at the right time. Here we go. The first quarter of every year, our focus is on planning. Yes, investment planning, comprehensive financial planning. As you can see, whoever had this tattoo done didn't really plan ahead all that well. But on a more positive note, Abraham Lincoln did remind us that you should sharpen your axe. You should have a plan ready. Let's dive into the wide, wonderful world of investment planning for today's town hall. I know some of you are focusing on New Year's resolutions because it is in the first quarter. Let's save all of us some time. Don't do New Year's resolutions. They just don't work. I mean, only 8% of people keep them. You waste your time, you feel bad. They're not good for your psyche. So we're going to talk about investment planning, comprehensive planning. We are not going to talk about resolutions because they are ineffective and we don't want to get screwed up by them. So those of you that tried them, let them go this year. Never bring them back. Let's have some fun. Who doesn't love Thomas Edison? Yeah, the guy that tried 10,000 plus ways to make the light bulb work. Well, we're not talking about good fortune like going to your favorite place for Chinese food and getting that little cookie at the end, but he did make an interesting point. Good fortune is what happens when opportunity meets with planning. So if you want good fortune, and most of us do, it's time to get on with the planning. Yes, most of us do enjoy a plan to make smarter decisions. Most of us are familiar with the thinking and the planning and the acting process. But sometimes we get so harried in today's lifestyle, we just act. We just kind of fire and then we try to aim later. I know it's a clever book title, but in reality, it's never quite that simple. So do you have a thinking process? Do you have a written, comprehensive financial plan? Because we do at Wise World, and we'd love to share our process with you about rigorous, goal-focused plan. We'll listen to you. We'll do discovery. We'll listen to who you are, what you value, what your real goals are, including your big, hairy, audacious goals, your outside your comfort zone goals, and then we'll make an actual plan. So if you were to ask me what's the most important single page out of a financial plan, whether it's 30 pages or 150 pages when it's done, it's the action page. We will put a tab in your notebook and we'll go back to that page and we'll take actions, but only after we've done the appropriate thinking and planning. We will not prescribe until we diagnose. Call us old school, but it still works. We'll also be using unconventional institutional approach. So if you're tired of the old, you need some stocks, you need some bonds, you need some cash, it's not working for you. It's time to see what the institutions and the big boys are doing because I think you'll benefit from their approach. How to work toward the level of comfort you desire. Most of my clients and prospects wouldn't consider themselves rich or famous, but they would probably use the word, they're comfortable. So, ownership is how one works toward the comfort level you desire. You always want to attempt to outpace current levels of inflation. The only benchmark that you should really care about is one that indicates whether you are on track to achieve your financial goals. I've observed the financial markets for years now, and I've noticed this pattern that repeats itself about every 10 years, kind of like wide ties and narrow ties for men's clothing, long skirts and mini skirts for the ladies listening. So about every 3 years, you'll enjoy your results. Every 4 years, you're going to get reasonable risk-return results, things that you would kind of expect. And 3 years are going to make you not want to have any fun at all. They're going to test your mettle, and that is the risk that's in the market. Another thing we want to be aware of is volatility. Volatility is a two-way street. It's not always down. It goes up, it goes down, it goes all over the place, hence the name volatility. But you're going to get some sudden, sharp leaps forward as well. So remember, volatility is a huge plus to real investors because there's a time for it to go up, time for it to go down. We want to take advantage of both situations. There is no clarity someday soon after blank blank XYZ happens, and you should never get out. I personally will die owning equities. Ownership. Timing is foolish. I've never met a single person who successfully knows how to time the markets. And timing is promoted by the media for their own reasons, and that's a whole nother conversation. We do buy when we have the money and invest over time on a regular basis. We get into our accumulation phase. We also sell when we need the money, going into distribution phase. And a reminder, there is no such thing as no risk. And of course, the famous Chinese philosopher Confucius said, "A man who does not plan long ahead will find trouble at his door." So we know successful people have financial plans. We know people that don't have as much success probably do not have financial plans. Everyone here today needs a comprehensive financial plan. Confucius was right. You have been saving, you have been frugal, you have been accumulating, and now it's time for the Wise World Withdrawal Protocol. Time to begin distributions. Congratulations. It's time to get into your years when you get to spend some of the money that you've been able to accumulate. So, step 1, upper left corner, your accumulation goal is accomplished. Give yourself a pat on the back, job well done. But you're not out of the woods yet, because we need to have a process, a system that works to make sure you have cash flow for the remainder of your days. So, second box, any large known capital expenditures coming up in the next 5 years? You have a daughter getting married, you have grandkids coming into the world, anybody finishing college? I don't know, your world and my world may have similarities and unique differences. What's coming up? Let's get ready for that first things first. Now, if we have something like that, if you go to the lower left corner, we can use zero coupons, we can use certificates of deposits, also known as CDs, to cover those. So if you have a need, let's get that specific need addressed. So that kind of takes care of our far left column. We're now moving into the center bottom as we work up. Set aside, yes, not 3 months, not 6 months, but 2 full years worth of your projected living expenses. So whatever the nut is you have to crack every month, whatever exact amount of money you need, normally it's 3 to 6 months. I'm thinking this day and age, it probably makes sense to be a little more conservative, 2 full years. Let's make sure that's set aside. As we go to the center, moving into the center of the chart, custom tailored portfolio to your specific needs. Some of you are conservative, some moderate, some aggressive, some shades of gray in between. You're all welcome. We'll figure out how to build the portfolio that works specific for you. And now that we've got your portfolio, you've been through accumulation stage, it's time to begin withdrawing 4.5% with a 3% cost of living or COLA adjustment to offset inflation each year. Some of us have been told that inflation disappeared and went away. I'm not sure I trust those sources. I think inflation is alive and well today and will continue to be with us for the remainder of our lifetime. So, in the long run, your withdrawals compound at 3% while you are having compounding effect, a positive compounding effect if all goes well on your investment portfolio. So again, that will vary if you're conservative, moderate, or aggressive. Your X factor will change based on your risk tolerance. So ideally, we should meet quarterly through technology, through face-to-face, old-fashioned eyeball to eyeball, sitting in the conference room together. But let's do some quarterly reviews, considering investment planning, tax planning, not tax preparation, there is a distinction there, estate planning, working with your attorneys and your legals, and risk reduction planning. So if we meet quarterly and you see there's 4 topics, you can see what the focus is as we go through the year. If we're only able to meet twice a year, 2 topics each meeting. And if we only meet at the minimum required once a year meeting, it's going to be a knockdown, drag out, full-fledged meeting covering all 4 of the topic areas. And last but not least, a large part of your lifetime investment return is from the planning. People with plans seem to do better over time than people without plans. And equity investing, owning things of value that grow faster than inflation over time, and not blowing up your plan at critical junctures. And that's why we're here at Wise World and have a withdrawal protocol that you might benefit from. I hope all of us today, this first quarter of the 2021, have an actual vision process. Let me share ours with you and see if it resonates, and you can borrow it. Have some fun with it. So how many of you today, as you look around each other on the call, have an actual written vision? I'm not talking like a vision board with nice little stories and pictures and the boat and the RV and those type of things. I'm talking about an actual sheet of paper that you have done either in your handwriting or you've typed up on your favorite word processor, and it talks about where you're going to be 5, 10, 15 years down the road, or the last day, and you begin with the end in mind and you're working back. Not only should you have it written down, not just in your head, because there's a tendency to have things changing because there's a lot going on, as you know, but once it's written down, I'm going to challenge you to A, put it in writing, and B, read it out loud with feeling and emotion 2 times every single day that you have as a gift. So first thing in the morning, it can be laminated by your bedstand. Pop that thing up in your laptop or your iPad or your phone. Read it out loud as if it's real. Reload. Boot up again. I'm not talking about booting up your software. I guess I am talking about booting up your software. And then at the end of the day, do it before you wind down. And I will tell you, you will notice a change in your life if you have a written vision that's active, part of the planning process. Now, the center chart talks about VNAR goes, VNAR goes, vision, now, action, results. I'm happy to walk any of you through this process. Glad your clients, glad we can help. But basically having a micro vision of something you need to do coming up. So this is a subset or a building block of the master vision we talked about on the left. Where are you at now compared to where you want to be? What actions are you going to take to do that? And how are you going to get results? And I'm going to walk you through a real example here in just a slide or two. But using the power of VNARGOs or little micro action steps can add true value. And last but not least, most of you have calendars, some of you electronically, some of you have pencil and paper. I love a pen, it's a great planning tool. Don't forget the time block. If it's important, you'll find a way. And don't forget to delegate. You've got to have a team around you because you always know that one person can make music. It's called a one-man band. But if you have more than one person, you can eventually get up to an orchestra. So I mentioned that I would go over VNARGO with you. Vision, now, action, result. Let me walk you through one that I'm currently working on myself, give you an example so you can create 1 or 2 or 3 for you. So my dad planted a seed of an idea many, many moons ago in me, and he said, why would you fly commercially for an airline when they tell you what to fly, where to fly, and they're basically in charge? I said, Dad, but I want to be a corporate pilot or a commercial pilot. It sounds like an awesome lifestyle. He said, well, why don't you fly what you want, when you want, where you want? And I said, well, easier said than done, but I like the idea. Thanks, Dad. So it's taken a few years to get to that point, but one of my visions was to own and operate my own helicopter. Well, the good news is that is becoming a reality. So you've got to do things like break it down to the actions. You're not going to fly your own whirlybird if you don't go to ground school. You're not going to do it even if you get a 99.7 on the ground school if you don't do your flight training. There's processes. The devil's in the detail or God's in the detail. Either way, you got to be looking in the details. So if we're going to go through it, having these mini little plans that tie into your action page off your comprehensive financial plan all come together. As you can see from the quote, Gloria Steinem, without leaps of imagination and or dreaming, we lose the excitement of possibilities. Dreaming, after all, is a form of planning. So this page is here to remind you in this presentation, keep the dreams going, keep working on your vision, keep working on goals. The happiest people I know have those all checked off and they're live and active. The unhappiest people I know are kind of letting the dreams and vision and goals fade. We're living in some very interesting times. Dreams, vision, and goals are more important than ever. So let's be a little unconventional. The word holistic, we think about it with healthcare all the time, getting all the practitioners to talk, getting your DO to talk to your MD. We do planning the same way. So you can see in the top center, a little bit to the 11 o'clock position, financial planning. And that relates to money and wealth and planning. But it doesn't take long before you get into retirement planning and income planning and making sure we have plenty of cash flow all of our days. And then it doesn't take long before we get over to the old 3 o'clock position and we're talking about tax reduction strategies, because all of us in this presentation have the same Uncle Sam. And then you're going, wait a minute, taxes, that's going to tie into the real estate, our use assets, our homes, our income properties, whatever the case is. Now we're in investment management, portfolio construction, and a little risk management with the long-term care, and transferring of risk in the form of insurance. And while we're at it, let's cover wealth. And this isn't even comprehensive, but you get the idea. holistic planning. If you've had a second opinion, great. If you haven't, we're happy to offer one. Let's make sure we're doing it right the first time. Looks like St. George and the Dragon have arrived. What in the heck? Uh-oh. We're going to make it 70s, 80s, 90s, 100 years old. I can't guarantee your mortality and how long you're going to live, but I do know that if we make it long enough, we might need a little help with activities of daily living. We might need a little bit of LTC or TLC, tender loving care, but we might need a little LTC, long-term care, because we have dragons in our future. It's okay to get a shield. It's okay to get a sword. It's okay to get a plan of attack because we know they're out there. Let's not go into that dark night lightly. Let's be prepared. So let's look at the big picture. Let's zoom in. Let's take some good action steps today. You see investment planning is the heart of the watermelon. It's the core. Comprehensive planning includes investment planning. And then before long, you're off to tax planning, because if you've done well on investment planning, now you've got some gains if all went well. Now we've got to render Caesar's what's Caesar's, but not extra, because we don't know how the game's played. After you do tax planning, you're saying, well, that was very fun. Now I'm paying my fair share of taxes. My investments are doing well, and I have an estate. You've created problems. So now that you have a wonderful estate, now we've got to talk about step up and capital gains and all the estate planning considerations to make sure your house is in order. And then the whole time we've got risk that we've got to make sure that we transfer some risk, retain some risk, and we're smart when it comes to risk reduction strategies and risk management. So if you said, where do we start? Heart, investment planning, lower your taxes, lower right corner, get your house in order just in case, and make sure you're constantly aware of risk. That's the big picture. The power of the process. Yes, having a system, having a routine, having a process makes all the difference in the world. So let's make sure you have an investment process, that you have the power of compounding and growth working for you, not against you. That's a whole discussion in debt at a different time. The power of tax reductions, trying to figure out how Congress lowers their taxes and see if any of their techniques can also be applied in your situation. It's an ongoing challenge. It's not going to go away anytime soon, so we might as well turn that into a system or a process. And then getting your house in order, keeping it in order, reviewing your estate planning documents and portfolio every 3 years, making sure you have an exit ready to go. Someday you're going to have to pass the reins on to the next generation. Are you going to die with your boots on, or is it going to be a little more elegant than that? And then risk transfer. You should not retain all the risk. You said, hey, I'm fine, I'm covering everything. That's kind of silly. The other extreme is you get insurance poor and you pay way too much in insurance. Let's find that happy balance. Let's have a proven planning process. Don't you love Warren Buffett quotes, like when he says, during bear markets, stocks return to the rightful owners? Well, here's one. Someone sitting in the shade today because someone planted a tree long ago. He gets credit for that. I thought it was someone in China. Either way, it's an awesome quote. You probably recognize his face, if not at least the artwork. Pablo Picasso teaches us that our goals can only be reached through a vehicle of a plan, which is our theme this quarter, in which we must fervently believe and upon which we must vigorously act. There is no other route to success. I couldn't have said it better myself. And another timely reminder from Leonard Bernstein, a famous American composer. To achieve great things, two things are needed: a plan, which we've been talking about, our focus today, and not quite enough time. I'm sure one of those you've already taken care of. Who doesn't love the late Zig Ziglar and his positive thoughts and inspiration? So what did he say about focus? What did he say about planning? Well, quote, unless you have definite, precise, clearly set goals, you are not going to realize the maximum potential that lies within you. That's the point of having a comprehensive financial plan with an action page and a team to back you up. That's what we're here for. We've been looking at wisdom from all sorts of pretty famous people in today's town hall. Let's listen to the words of a very famous coach, Tom Landry. Setting a goal is not the main thing. It is deciding how you will go about achieving it and staying with that plan. That is the main thing. Comprehensive plans create tremendous value. Success and failures are at opposite ends of the same spectrum. As you can see from the quote, smart decisions are made by choosing between what you want now and what you want in the future. So let's get to the wise world actions for you now. Number 1, get a plan. People with plans seem to do better than people without plans. 2, make sure you open some of the following accounts if they're appropriate for you. Some of you might want to have a I could pay off my home tomorrow account. That way you have some confidence that you'll own your home free and clear someday. You also might want the power of a tax-free growth inside of a Roth IRA. Again, might be appropriate for some, not all. Let's consider a Roth IRA if it might be right for you. And again, starting a business, there's tax deductions, tax breaks, nice things that can happen from being a small business owner. There's risk and reward and challenge. So imagine making smarter decisions with more confidence. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. The economic forecast set forth in this material may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. This information is not intended to be a substitute for specific, individualized tax or legal advice. We suggest that you discuss your specific situation with a qualified tax or legal advisor. A Roth IRA offers tax deferral on any earnings in the account. Qualified withdrawals of earnings from the account are tax-free. Withdrawals of earnings prior to age 59 and a half or prior to the account being open for 5 years, whichever is later, may result in a 10% IRS penalty tax. Limitations and restrictions may apply. The fast price swings in commodities and currencies will result in significant volatility in investors' holdings. Investing in real estate investment trust, REITs, R-E-I-T-S, involves special risks such as potential illiquidity and may not be suitable for all investors. There is no assurance that the investment objectives of this program will be obtained. CDs are FDIC insured to specific limits and offer a fixed rate of return if held to maturity, whereas investing in securities is subject to market risk, including loss of principal. Stock investing includes risk, including fluctuating prices and loss of principal. The prices of small cap stocks are generally more volatile than large cap stocks. Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA/SIPC.